Alright, so we had a decent day. It was alright. Made money on the day, but it was a tricky market coming into the day. So I would have to say that I expected it to be bad price before the day started, because look at where we're at on the higher time frame. If we go to a 4-hour, we are just chilling in this massive fair value gap. We're just chilling inside a big 4-hour bearish, but it doesn't mean we're just gonna drop. Then when you look at the draw here, we have no reason to just pump straight up. We have this big move up that we haven't retraced to equilibrium, which is down here. So the higher time frame gives you very little, and then the 1 hour going into the day, or if we go to the 15-minute, is really just a load of chop. Just accumulation here, just chopping. The way I like to explain it is that if this was a 1-minute chart, would this price be good? We come here, we come down into a bigger time frame fair value gap that we deliver out of. We inverse this move, and then we get to the break-even point if this was a 1 minute, and we fail to take the high. Okay, now we chop down, we fail to take a low. So I knew going into the day, until we took this high, this low, or even bare minimum this high, price wouldn't be efficient. And look what we've done. We've chopped in this range. We've stayed inside this gap right here, and we haven't been able to push out. We haven't been able to go lower and take this low, and we failed to take the high of the different sessions. So this is New York session when it opened. We failed to take a London low and the Asia high, or yesterday morning's high. So that I knew that was going to be bad price action. And why did I know that? Again, because we're in the middle of nowhere on the bigger time frame, and we haven't taken this high or low. If we took out this low, we could have a bias to go higher with structure, and same thing at the high. You can get context based on the market. So going into the day, I knew the market wouldn't be very efficient because of those reasons. I didn't have a bias because of those reasons, and I made a few mistakes because of those reasons. So going into the day, I actually was waiting for something to happen. We ended up getting with ES. Let's see when we took this high out. 10:05. So at 10:05, which is around here, we had an SMT on ES and NQ from this high. So this high hadn't been taken on NQ, but ES took this high. So that was a bearish confluence. At the same time, so if we go back on the day, so we had a bearish confluence, and we were coming into this 15-minute fair value gap. We had an SMT at the high. So my first trade was as follows. So we hold this fair value gap, and then the first trade I took was an inverse here. Took an inverse fair value gap, I believe. I was targeting this low and this low, and the reason I should have got out a little bit earlier is because this 5-minute ends up holding, and we push higher. So that was the first trade. I didn't take profit when I should have. We had an SMT here as well at 10:05, 10:11. Yeah, so we had an SMT here. That's why this inverse was actually valid. We had an SMT inside a fair value gap, bigger time frame SMT. We take this. I should have capitalized at least on a 1-to-1. So my stop loss was about 18 points, so I should have taken off at something at 18. Should have taken something off here at this fair value gap that ends up holding. So anyways, this 15-minute or the 5-minute holds. And again, why did price not take out this low? Because on the higher time frame, we're just chopping until this low or this high or this low gets taken. You don't have a clear bias. Price is not going to be efficient. Price doesn't have to move correctly. So that's something to always keep in mind. So then anyways, the next trade that I should have taken along here off the inverse of this 5-minute, because we bounce out of this fair value gap. We inverse this move, and then what happens? What happens next is we get a 2-minute fair value gap that we end up holding right here. We end up holding it and displacing higher, and then we end up running. The trade I ended up taking, my second trade of the day, was when we created this 5-minute fair value gap, bullish. Let me get rid of some of this mess. So this 5-minute bullish here, the reason I took this trade is because we came down, and when we closed here, I knew that I could get a small winner to this high. So I targeted the high off the break of this fair value gap in the 5-minute because I knew that we had higher to go. We could draw to this high, and we ended up running, won that trade. Then the next trade, we have an SMT here, and we continue to sell off. We'll go to the 15-minute. So we sell off here on the 5-minute. We sell off. We come into this 5-minute and hold. Now I'm not sure if we're going to get shorts or longs. We come back into this 15-minute. I'll clear this out. This 15-minute fair value gap here. We come inside it. I was like, okay, cool. What's going to happen? We come into a 5-minute. We break this inverse. Goes to break even. Didn't take that trade. We come back down. We sweep the low. We fail to go lower. We hold the 5-minute bullish. And with the speed, we inverse. I jumped in on 2 micros. I jumped in right here. Stop about here. Went to break even here. And then targeted higher. So this was a good trade. I didn't realize there was news at 101. That's what happened there. But overall, that was a good trade. I'm not really sure why I just sold off to go back up, but it is what it is. This could be another entry. They get to here, break even, whatever. But remove the drawings because my trades aren't what I want to talk about. I want to more go over the fact that when you look at the 30-minute until this or this, until those highs or lows get taken, you can't really do anything because this, if you looked at this and this was a 1-minute time frame, would this be appealing price action? It would not be. On a 1-minute, if you look at the chart and right here, if this was a 1-minute, does it make sense? We sweep liquidity. If this was a 1-minute, let's just assume we're in a fair value gap. Let's just assume this is a higher time frame fair value gap that we're delivering from. We hold a fair value gap. We sweep liquidity. We displace higher. And then we inverse a fair value gap. And then we get to break even. We get to break even. And then we hit our target. This price action is very good because we have a higher time frame fair value gap. We sweep liquidity. We inverse. If this was a 1 minute, this looks good. If this was a 1 minute, this looks horrible. You see what I'm saying? Is that you just have, this is how you understand price. This is how you know when days are going to be bad and when you need to be more risk-free. This price action is beautiful. And what I have to say about that is that when you come into a day where there's no clear draw in liquidity and you don't know you don't have good trades and it's just chop, because anything in between here is just chop. So anything in this area is chop. On a day like that, you need to be more aggressive on taking profits, and that's what I've learned from today, is when I don't have a clear draw in liquidity, this is the price you get. It's a range day. You go up, you come up, you go down, you go up, you come down, you go up, you come down, you go back up, you come back down. It's a range day because you're chopping in a range. You're chopping in this bigger time frame range. You're just going from high, low, low, high, low, high, low, high, low. And that's all you're doing. So when you're chopping in a range and there's no clear draw in liquidity, you have to be aggressive taking profits. When I jump in this trade here, I need to take profits along the way, scale some out, and leave runners. You shouldn't hold the full TP. That's the problem. My biggest problem is I don't hold the full TP enough on good days where the market's moving efficiently. So that's why today I didn't get full profits a lot. I didn't get a lot of profit, is because I was trying to stick to my rules and hold for full TP, but I failed to recognize conditions of the market. So that's the biggest thing, is you have to learn how to recognize the market conditions that you're trading so you can best trade it and fully maximize what you're doing. Because yeah, if I start scaling a lot on this move down and then it ran all the way down to this take profit, cool. I missed out on some of the money, but on a day where you're in a bigger time frame range and you're just chopping going to high to low, you have to be more aggressive on your take profits because it just is bouncing up and down. If you shorted it here and you wanted to see this low, now you're back to break even, and you know what I mean? So recognizing market conditions, learn how to recognize market conditions. What I take away from today, that's what I take away from today. Today I got better because I'm better understanding market conditions. I've seen again firsthand why market conditions matter and how to learn from market conditions. That's my big positive from today. The negative from today, I would say I was letting the market conditions frustrate me. The market is not bad. Price action is not bad. Don't blame price action. Don't blame whatever. The market's telling you what it needs to, and you have to make a decision. So the bad thing I did today was getting frustrated because of price action, getting frustrated because my trades weren't going full TP, getting frustrated because I didn't make as much as I wanted to. You can't get frustrated in the markets. You have to understand what price is telling you and read market conditions. That's all I got for today. There's not really much to go over. Pretty fun day, honestly, in trading. Pretty interesting. But that's what I gotta say, is just learn market conditions, gain experience with it, and understand why or why not price should be doing what it's doing. Have a good day, y'all. I will see you tomorrow.